You're watching Power Breakfast on CNBC TV18. Now, in the last leg of our special series, Asian Tigers, Udayan Mukherjee caught up with Krishna Kumar of Eastspring Investments. He expects there will be a gradual recovery in FY18. Here's a slice of that interesting conversation where Udayan began by asking if earnings will turn around in the fourth quarter.
We are going to see some recovery. There are improvements in the margin. Quarter on quarter, we will look better, but the consensus numbers are likely to be missed.
Is that a worry, Krishna? Because, you know, this hope trade we've played for the last couple of years, people keep saying this is the year of the turnaround, and then in the middle of the year, the hope sort of fizzles out. Are you more confident this year that in the next 3-4 quarters we'll see a decisive turnaround, or are the metrics that you monitor not giving you that conviction quite yet?
So, you know, there are a number of things that we are watching. One, obviously, is the way the GDP trending. Second is the overall matrices that kind of add up to become the GDP, which is maybe cement, maybe power, maybe multiple other factors which are kind of pointing towards the GDP number. All in all, in summary, it looks like it is going to be a recovery, but it's a very gradual recovery. It is not a sharp rebound. How much do we rebound? It's a question that we will have to wait and watch.
One of the key macro metrics which everybody seems quite worried about is the very, very tepid credit growth that we are seeing in the system month after month after month. Yet, it's not showing up yet in the reported numbers of at least the top corporate banks or the retail-facing corporate banks. Do you see sluggishness getting into the banking system? Because that will be a blow which will be difficult for the market to digest.
Yeah, there are several questions there. I mean, the first bit is on credit growth. The credit growth will remain tepid. There is a step change happening in the banking system. And the change is basically that the wholesale banking system is obviously moving away. It's got disintermediated by the corporate bonds. And the corporate bonds are clearly now more active, which is through the sovereign funds or the insurance money that is available. So that is clearly taking over. So you will possibly see, or we will possibly see, a more sluggish credit environment that we have.
The other space which would be challenging you as an investor now is IT, and Infosys numbers would not have made it easier for you. But I mean, I know you own some of these larger IT companies in your portfolio. How do you see the road forward? I mean, should you just keep holding them, hoping for a turn, or do you think they're probably going to be fairly low growth companies for a significant length of time?
So that space has been quite a worrying space, for a variety of reasons. First is obviously the changes which are happening in the world. There are huge disruption in terms of technology evolution which is happening now. And I think there is a fair bit of AI, robotics, which is kind of changing the overall landscape. The second bit which is changing is the evolution to cloud and increasingly adoption of cloud, which is happening. So these are changes which are going to be very, very scary as far as our Indian IT space is concerned. What is not working for them are two things, or three things maybe. First is obviously the currency is not working for them. And second is the protectionism, which is pretty global. And the third is their inability to kind of automate their system or abuse the word automate in their system, which is kind of making them look a little archaic. So they have to kind of work around these three situations to kind of come out of the hole.